All right, guys, how's it going? Currency Strides is Kyle from FXU and Active Management here to give you guys a top-down run-through of what's going on in the markets for this Tuesday, February 13th. We have some top fundamental of reports coming out this week. We got the CPI, the PPI, the inflation rate. These are going to be coming out for USD, Yen, and the British pound or the sterling. Um, Now, these inflation rates could cause some massive swings in the market, some intense volatility moments. So, really, the strategy here, if you do plan to trade them, which it's pretty tough trading news, but if the setups are correct, I do every now and then take some of these trades. So, But first, let's go through the top-down run-through of some of the majors or some of the most important movements in the market that took place today. We see the S&P 500, the major equity, is down 6%. The NASDAQ is down 10%. The Dow's down 83 points. Small caps down 20%. DAX down 86 points. The dollar is down a half percent. Bitcoin futures down $240 or 3%. Gold is up $3. Oil is down 20 cents. UJ is down 100 pips, which is at an interesting place that it hasn't been in a little while here. I can give you a quick look at this because this is a little interesting to look at. Alrighty. So we are deep down in there right now. So that's what's going on with UJ. It shaved this last night. I remember before I went to bed that this was looking in this lower extremity here. Alrighty, and EU is up 70 pips from yesterday's closing. So we got a nice bullish candle here on the daily. So it looks like they will be. I did take a trade. I did claim about 50 pips out of this break of this consolidation to the upside. That's pretty much how my trade looked. I did take profits at 50 pips, so it was a good trade for me. I did leave some money on the table, so we will be investigating a little bit more as to make sure we don't leave as much on the table. It looks like we left about another 25 pips on the table. So, but that's what our plan was set to. So we stuck to the plan. We took profits. We're out the market. We're looking for the next strategy or the next possible trade. Now, I got big interest on a short tomorrow in the U.S. major equities on the inflation rate. We know that the United States inflation rate is not in good territory, and the deficit never was either. And it's going to be pretty crucial to pay attention to the U.S. government 10-year bonds, as these will show what the rest of the stock market may be looking at. So it's important to realize pretty much where this may be during that time of that report. So it's going to be important to watch that. It's going to be important to watch our VIX. VIX, our volatility index, it's going to be quite important to watch as well, as things are starting to calm down a little bit right now, but it might get juiced up a little bit tomorrow. All right, so now if you paid attention or if you followed along actually with me on my last podcast, or my last video, I was talking about the major equities and finding the bottom. And I actually discussed about a possible 25% correction and what one would look like, and the 15% correction. I went as far as the 50% correction due to history that supports a 50% correction that took place during the financial global crisis back in 2008 and the dot-com bubble in 2000. So these are 50% corrections. They did happen in our history, so we can't say that they won't happen again. And then we have smaller corrections that took place in our time that brought corrections of up to 15%, which we have labeled here. This took place during the some kind of European financial crisis that they were having over there, that led to some uncertainty in our market, and that produced a 15% correction. So we are right now currently in so the most of the correction that we've seen to date was about 11%, 10 to 11%, which isn't really that bad in comparison to what has actually happened in our history. So I'm anticipating at least a 25% correction, I think personally, or at least a 15%. But I'm shooting for a 15% so far. I set up what I felt like would be the next leg down. Yesterday I was breaking down this pullback as we see price pull back. Price had broke to the downside and had a pullback or an adjustment of 5% before making another leg down, which that leg down produced about another 7% down leg. Now from here, another 7% down could very well break these lows. And lower. So it's going to be kind of funny, a little tricky here. So approximately where my TP, my take profit is at, is about another 7%. So I approximately tend to reach these new lows, which is at the end of this candle, which would be filling the wick of this candle on the weekly. So it's going to be kind of important to understand what exactly is going on here. But this wick to the downside, I believe, will be filled, and so that will be my target on the inflation rate. On the inflation rate report, I'm anticipating a bad report, and more downside and more pressure in the U.S. major equities. There's a lot of uncertainty in the United States stock market right now, and it goes to show that there has been no advancement since this correction has started. We're on like week 2 or 3 now. There's zero advancement. I don't believe that there will be any advancement during this time of uncertainty, and the inflation rate is not going to side with this. So I think there's another big short coming up, or a reasonable short coming up, and myself and active management will probably take part in catching this short. So we'll see you for the inflation rate tomorrow.